that might be, we can always get started. And then obviously if people still show up, it's not a big deal. Um, so let me introduce John. John's been with IDA for quite a while. I mean, we've known each other for at least a couple years, if not more than that. John, the one thing that's been great about IDA is over the years they've always had people that were able to help and answer questions all the time. I mean, John, literally, I feel like that's all you do is like take my phone calls,
No,
answer the
that's what
questions.
I don't
Um,
mind.
and it's great because as everybody knows, like that's the number one thing for me is communication. And IDA, that's one thing that I've never had a problem with IDA, and so that's one of the reasons why I feel like that's the program that we all need to like focus on, because it's like it's not that difficult. It's, again, they communicate and help anytime that we have a problem. They get solved quickly. And again, at the end of the day, if we don't close deals, we don't make money. So obviously that's a big part. So John, if you want to tell us everybody a little bit about yourself, and then go into the programs, and we'll go from there.
Sure, absolutely. Well, my name is John Maksim. I've been with IDA over 7 years now. Wow, it's gone quick. But and what's funny, my background is actually in operations, mortgage operations. I was underwriting during the subprime years. I underwrote, underwriting manager, and then at IDA, I started reviewing the files, sort of like underwriting or whatever. But then it's been about 4 years. I evolved to account manager because it's sales. I don't know if I'm a salesman, whatever you want to call that, but I educate and I return phone calls and answer the call if I can. So like Steve mentioned, my job is basically customer service. But if I get back to you or anybody else, it's the product sells itself a lot of times. So it's just explaining it, understanding it, especially working with all the loan officers and everything. So I've been at IDA a little over 7 years now. So it's gone quick. Seen a lot of things happen. I've developed a lot of relationships. It's good. It's treated me really well and everything. Even though I'm an account rep, just to let everybody know, I'm straight salary. I don't make bonus or commission, but I will sit on a phone for an hour and go over anything, anybody. If you have a borrower that has a question, it's sort of like give out my contact information. I talk to borrowers all the time. I don't mind at all. Whatever you guys need, support. Steve asked me to do this, but in the future, right now we're restricted. But if you want to do a home buyer event, I can come speak at it. Any type of event, just reach out. We have myself, Rachel Falzone, she's in the Rockford area, and then Rosie Virgin's in the Chicagoland area. Rosie's been in the industry a long time and everything. So just reach out. Anything else I should touch on, Steve? Or you're on mute.
Yeah, I just got it. Yeah, I don't think so. I mean, that's a good part about where you are, what your background is, and again how you can help the agents and what they're doing as well. So for sure.
Cool. Well, I'm gonna try. I have a short. It's 8 slides, so I never want to bore people. I'm gonna try and share it, Steve, and we'll see if that works. Okay, you disabled it. I could just talk or whatever, but I could talk about our programs, the qualifications, and everything. So with IDA and everything, just to let you know, IDA reviews nothing before closing. IDA doesn't have to review anything. So if you've ever worked, I always tell when I'm doing a realtor presentation, I'm like, if IDA is taking a long time compared to normal loan, you're working with the wrong loan officer. And I'm very open, honest book about everything actually, but I just tell people because IDA doesn't have to review anything before close. The lender actually funds that down payment assistance, and then they get reimbursed from us after the lender closes. When I talk to the borrower, I'm like, after you're sitting in your house having your cocktails, if you have a drink, having a housewarming party, that's when the lender is coming back to us to get the money. So we don't have to review anything before close. IDA should not hold up your closing at all, just because the borrower's getting IDA. Another thing I want to mention, you might have done IDA in the past, there was a seller affidavit that had to go out to the seller to get signed. We've eliminated that. So the seller doesn't have to sign anything for IDA anymore. So made it nice and easy, quick, to get an IDA loan done. Okay. So some of the qualifications for our program is the borrower needs a 640 credit score. We do require that. And like I said, I can email Steve the PowerPoint. It's just 8 slides if you want to share it or whatever, Steve afterwards. But a 640 credit score. Okay. Another thing we require is that the borrower, I'm just trying to go off the top of my head, the borrower 640 credit score, 45% DTI. That's income for those that aren't familiar. Our programs are developed for low to moderate income. When I say that, it is moderate income. Most counties are around 109,000 for the borrowers, all the borrowers' income combined. Okay, so there are a lot of people that do qualify for IHDA. And in March or April of this year, our definition for that income limit was household income. Household income was your borrower, the non-borrowing spouse, whether they were going to live in the house or not, and anybody over 18. So if you had a college student living with you and they were working, a job, we had to include that towards that income limit. If you had a parent living with you and say they were getting Social Security, for example, we had to include that in household income. In March or April, like I mentioned, we were able to change our definition to just include borrower's income towards that income limit. So if you have before, and I'm making up numbers, it's 109,000 in Cook, Will, DuPage County. But if you had one spouse making 55,000 and another spouse making 55,000, even if one spouse was a borrower on the loan, before you couldn't do IHDA. Now, if just the borrower or borrowers, I should say, add up to below the income limit, you can do IHDA. So that makes it more available for more people. Okay. Hold on just one second. I'm just going off memory right here. But so 640 credit score, like I mentioned, types of properties you can do with IHDA are single family house, a condo, a townhouse, and you can do up to a 2-unit property with IHDA. The borrower has to reside in one of the properties. I mean, one of the units, if you're doing a 2 units, they can use other for an investment, but everything's owner occupied, but you can do up to a 2-unit with IHDA. Okay. Also, with the programs we have right now, the access programs, you do not have to be a first-time home buyer. Meaning someone could have, say they have a condo now and they want to buy a new primary residence, they could actually keep that condo as an investment and use our programs to buy that new primary residence. So the programs allow you to do that. So there's a lot of possibilities and everything. Let's see. Contribution. So when I talk about the programs, we offer assistance and everything. And depending on the loan amount, we might have down payment assistance. You might have seller paid closing costs. That's still allowed with IHDA, just like any other loan. Seller may be paid closing costs. So in that instance, if IHDA was to cover all the down payment, depending on the loan, and the seller's paying all the closing costs, if that worked out, you're thinking, oh, the borrower can walk into the house without a dime. IHDA still has an overlay requirement. They got to have at least, if it's less than $100,000 purchase price, $1,000, above that, 1% skin in the game. And by skin in the game, I mean earnest money. That counts towards it. Most of the time, I'm sure everybody on this call is most likely agents. You have earnest money, right? And it's usually about 1%. You got that covered. Or they're paying for an appraisal. That can count towards that 1%. Or they're paying for an inspection. So sometimes, whenever I talk to borrowers, I'm like, you can't just walk into the house without a dime out of pocket. You have to have some skin in the game towards the purchase, but that can actually, you can use gift funds for that too. So just give you a little overview. Minimum investment, I talked about the property types. I mentioned first, the current programs, the access programs are first-time and non-first-time home buyers. The credit score I mentioned and everything. The income limits, you're not going to memorize these, but like I said, Cook, DuPage, Kane, Lake, McHenry, Will is $109,200 per year for all your borrowers combined. DeKalb is $100,920. So all the counties are at least the minimum, I don't know if I'm saying this right, $100,920. So if you're looking at a borrower and their income is below $100,000, they're going to qualify no matter what county they're buying in. If you're above that, you can reach out to Steve. He can show you the exact income limit for the county. All right. So that's overview qualifications. Current programs we have now, they're called the access programs. All right. And there's 3 different choices. The first is a forgivable down payment assistance. So with any of our programs, Steve's going to give them either F8. I don't know if I'm saying it wrong, Steve, let me know. But you can do IHDA with FHA, USDA, VA, and also conventional, all loan types, essentially. Some of the lenders don't offer it with, say, USDA or something. So Steve can let you know for sure. But they're going to get a, traditional, if you want to call that, first loan. You can't stack, do IHDA with a 203K, not a rehab loan, just a traditional first loan. Okay, so they're going to get a regular first loan, and then they're going to get a second mortgage from IHDA in our down payment assistance. So the first choice is a forgivable down payment assistance. It's going to give the borrower 4% of the purchase price in assistance up to $6,000 max. So what that means, if they're buying a $100,000 house, IHDA is going to supply them $4,000 for assistance. $150,000 above, we're going to supply them $6,000 for assistance. 4% up to $6,000. So they're going to have their first mortgage, Steve's going to give them, and then IHDA is going to give them assistance. Let's say it's $150,000 or above, $6,000 in assistance and a second mortgage. That second mortgage in the forgivable program, how that works is every single month, $50 will be forgiven of that $6,000 in this scenario. So if they stay there 10 years, don't sell, refinance, or move out of the property in 10 years, that's completely forgiven. They will not pay anything back of that $6,000. If they do sell, refinance, or move out of the property before that 10-year period, before it's forgiven, they'll just pay back that amount that's not forgiven. So they will pay back a prorated amount. So it's 4% up to $6,000 forgiven equally over a 10-year period by the month. Okay, does that make sense? Hopefully that makes sense to everybody. So that's for current forgivable program. Like I said, if they have a house now and they want to buy new primary residence and keep that current house as an investment, it's got to make sense to the underwriter that the new house will be primary, but they could buy a new primary residence, keep an investment with these programs I'm talking about. So that's the Access forgivable. The next choice, and you can't stack these choices, the borrower can utilize one. It's called the deferred program, Access deferred. And I like to use a scenario. It's like borrowing money from a family member, no interest, no penalty, but you will be paying it back, the full thing, okay? It provides 5% of the purchase price, and it maxes out at $7,500. So $150,000 above purchase price, we're going to provide $7,500. It's a 0% deferred loan. No monthly payments, no interest, no penalties. But when that borrower sells, refinances, or moves out of the property, or if they kept the first loan for 30 years, they will be paying back that assistance. So if you want to call it a silent second, a deferred second, it's just assistance, 5% up to $7,500, 0% interest, but they pay back the full thing. All right. So that's option number 2. That's called the deferred program. And then the third option, it's a repayable program. What we do is we provide 10% of the purchase price up to $10,000 max in a repayable loan. 0% interest, paid back over 10 years. So if they're purchasing at $100,000 above, we're going to supply them $10,000 in assistance. They're going to have a second mortgage for $10,000, and they're going to pay it back 0% interest, and that comes out to $83.33 per month. All right. The way I've seen that used sometimes, say they're close, they're doing a conventional loan and they're close to putting 20% down. Maybe that additional assistance helps them get to 20% down. So yes, they're paying it back at 0%, but they're avoiding mortgage insurance. So I've seen it used like that. Or maybe you have a buyer that's really cash strapped, right? They have minimal, and you're not in this environment. It's a little harder to get seller concessions. So we do have that option, 10% up to $10,000 to help them, because with our assistance, you can use it for down payment or closing costs. So hopefully the description of those 3 products makes sense, the way you're describing them and everything. Those are current programs. Right now, I have no details. It's a possibility, but they are preparing 2 to 3 programs to go to our board next Friday. There's a possibility we could be rolling out programs at the end of the year. That's our goal. If it happens, it could fizzle out, if you want to say that. But there is a good possibility we might have new programs coming out towards the end of the year. I don't have any details on them right now, but when when I find out if the board approved them and when we can release them, I'd like to, just hop on with you, Steve, and anybody like to join and speak about them as soon as I know about them. So I will mention that. That is our goal right now. If it happens, we'll see, but that is the goal right now. So it's different speaking, with not a live audience, Steve, because usually there's questions, there's, all that good stuff. I see you guys out there or whatever. But it's a little different because the material I cover, I never want to bore people. I never want to go. It's 8 slides, right? I could talk in 10 minutes, and Steve and I could talk all day. You guys know that. But
so let me ask you a couple of quick questions from the general perspective, and then I'll open it up to the floor. So let's do one. So does it have to be a single person or a married couple, or can it be like a brother and sister buying a house together? Can it be a mother and father, as long as they're living in the home?
Yes, that is correct. Anybody can buy it together. We don't allow non-occupant co-borrowers. I think that's a term you use. So everybody, like you mentioned, everybody on the loan must occupy the property. But yeah, it can be, I've seen that. Actually, I've seen parents and children buy a house together. It might be a first generation home, right? And they, you have families that are working. I'm sure you guys, I have a longer presentation. I think it was a statistic from the Realtor Association. 39% of people still think you need 20% down on a house. 39% of people. So, and you guys are agents out there. So that tells you 39%. Steve's got programs with minimum down, right? I mean, with our programs, you can do FHA 3.5% down, conventional on a single unit with 3% down, and use item for most of that assistance and get in house with very minimal money. So I know I went off on other things, Steve, but
no, that's okay.
Yeah, but I've seen a lot of one of the loan officers in a area. He said probably 50% of his purchases are first generation homes, because a lot of people just, you guys, I mean, I can't say for sure, but we all started out in our careers, and a lot of people, making very minimal money, and you never thought you could buy a home, but there's a lot of people that have been working a long time, and maybe they're making $25 an hour, $20 an hour, They don't think they can save for a home. Well, that's what's nice about this. They're paying their bills. They're paying their rent. They're paying everything. But down payment was one of the biggest hurdles. And that's where, I've seen so many people become homeowners with our programs. And it's exciting,
Sure.
So that was a lot.
What's the most popular of the Access program that you see?
I'd say the most popular, I'm pretty sure, is the forgivable. Because that, and then the second is a repayable, okay? Because it's $10,000, unless it's $100,000 below $10,000. The deferred, I mean, to be honest, when it came out, I'm like, nobody's going to use this. I mean, like I said, I'm a very open book. But believe it or not, it's used quite a bit. I heard one lender say, and I thought this was interesting, you had a buyer that was going to buy the house. It wasn't a rehab, but they were going to fix it up and plan to sell it a year. They're like, I'll take the $7,500. It's an interest-free loan. I know I'm going to pay it back. And I'm like, oh, that's interesting. Because if you're going to sell it in a year, the repayable, you're not going to have that much forgiven, right? I mean, you're not going to have that much paid. And the forgivable, you're not going to have that much forgiven. So I see that in that instance where it would work. But yeah, the forgivable is the most commonly used one.
Gotcha. Okay. So let me open up to everybody else. I can obviously unmute you, or you guys can unmute yourself, depending. Does anybody have questions?
You guys hear me?
Yep.
Yes. Okay, thank you. Going back up to when you said the borrower needs skin in the game, was there a minimum percentage that he needed, or amount of the purchase price?
Yes. So it's $1,000 or 1%, whichever is more.
Okay,
so
got it.
Essentially, yes. If it's below $100,000 purchase price, they have to have $1,000 above that 1%. Like I said, that can be earnest money or anything the borrower puts there to purchase. Earnest money, appraisal, inspection. So generally, they're putting that money in anyways. It's just, you see sometimes, not often, where you have no earnest money on a deal, right? Doesn't happen that much, but no earnest money or something like that. And then Steve's might be like, you know what? You got to prepay some of your insurance because we got to have so much into the transaction. It doesn't come up that much, but I do mention it because, like I said, if you're if you're using item money for the down payment and then you have seller concessions paying the closing cost, which is allowed, they might think, oh, I can walk in this house without anything. So
Yep, got it. Thanks.
no
Yeah,
problem.
I know for what I was doing after probably in the last year or so is I was having trying to have the earnest money be the 1%, exactly 1%, so that way we knew that it's covered there. Because I know you were saying sometimes, like, with the with like the appraisal, you got to show that it's actually been paid, that it came out of their funds.
Actually,
To,
I don't mean to cut you off, Steve.
No,
For
for
IHDA,
sure.
just so you know, Steve, this isn't an agency rule. If agency requires a minimum investment, of course you have to follow their rules and everything.
Sure.
But generally on a single unit, not on a 2-unit, they don't have a minimum investment. You have to, IHDA has that overlay. IHDA will actually count an appraisal paid by a credit card, just to let you know.
Okay.
So if you ever run into that where you're like, say they're buying a $200,000 house or $150,000 and they put $1,000 earnest and they pay $500 for the appraisal, let's just say, even if it's paid by credit card, we can actually count that towards IHDA's minimum investment, just to give you a heads up.
Okay.
But like Steve said, the easiest, if they're thinking about doing IHDA, have them do 1% earnest money. And that's the easiest way, just to make sure you have that covered.
Anybody else?
Anybody?
It is different whenever we're
It's
not
actually,
sitting there
I have a
eating
question.
food.
Yeah, go ahead, Jennifer.
Well, I do a lot of stuff online right now, obviously, because we can't talk to people in person. Do you have any resources, or do you do first-time buyer Zoom chats or calls that we could, like I have a group that I have like a what's happening page on Facebook that we could schedule something out to invite people in for a first-time buyer seminar or Zoom chat?
Absolutely. I used to do them all the time in person. Don't mind. I mean, it's a different atmosphere, right? I talk with my
Right.
a lot. Sorry, Steve knows that. But yeah, we can definitely do something like this. I can talk as short as 5 minutes or as long as you want me to. Now, I'm never want to bore people, but I love seeing buyers. You get excited. You guys experience that every day when they're, especially our programs currently don't require first-time home buyers, but a lot of first-time home buyers use it. And they're realizing a dream that some of them never thought possible. So most
Absolutely.
certainly,
Yeah.
just reach out to me. And definitely Steve knows how to get a hold of me, and we can definitely do that for whatever you guys need for helping your business. Like I said, if I can contribute, just reach out. Most
Excellent.
certainly.
Thank you.
No problem. Anything else you want me to cover, Steve, or mention?
Well, I know that the one thing that I was thinking, as far as like one thing that would support real estate agents and possibly bring them more business, was the idea that because this access program is not first time home buyers, I know I've brought up the idea that, especially sometimes where these people they want to sell their house, but they don't have enough equity to buy the new home. Now they actually have that option where even if they're coming to closing and they're bringing money on the first house, now they're getting money to be able to put towards the second house. I think that's a huge thing about with the access program, where people would just be, oh, we still have to wait time because we don't have any equity in the home, that kind of thing, where even if they're coming out even or even bringing some money, they still can actually buy that next home by using the access program. And I think marketing is a big part in it. If you've got any other ideas that you've heard from other lenders, agents, what they're using as far as program, how to use the program to get more business, I mean, that would be probably something very helpful for everybody.
Gotcha. One thing I mentioned, and this might be like I said, I'm very open book and everything, sore spot or whatever. But say you have a divorced couple, right? They're going through a divorce, and maybe they had a house in the following, and they had to sell it because of the divorce, and they're looking for something permanent, or they have children, something permanent. Before, with our programs, hold on just 1 second. Before, with the programs, first time home buyer, you couldn't use our programs. But now if you have someone coming out of divorce and they want to get a home, they want to move on with their life. I never mean to offend people, but they want to be settled, right? And they don't have that much money to put down. They owned a house before in the marriage. Now, they have to sell it. That is I know that sounds bad, a good client base, but that can be, really help someone going through a rough situation. Hey, I can still get settled, even move on with my life. All right. I've seen that. And you know, you guys are running across buyers every day and everything, but I've seen that where they're like, I've had people say, thank you so much, because I didn't know when the next time I'd be able to own a house. I was able to take and stay in the same school district, keep the kids in the same school and everything else. So I've seen that used. And then just, you know, typical thing when we got on the field, it's funny. I have like little, they're little riders that say up to 10,000 assistants or whatever, you know, the sign riders and everything. But right now I am secluded per work orders to the house and everything. So how's, you know what? And I know we don't want to be too long. How has business, I mean, business has been well this year, I believe, for the market, which was a big surprise to me personally. I think to a lot of people when everything went down, you know, with unemployment going up. But how has business been overall? You guys getting pretty decent this year for everybody? And that's great to see, because you didn't know how it was scary. It's still scary, you know, but it's good to see that, you know, business is going on. People are struggling, and that's unfortunate, but at least, you know, if we can keep parts of the economy, I'm sure you guys went, I don't know if you were in business 2007 and 8. That was me personally. That was hard. And you see so many industries. Now you see some industries, but thankfully mortgage and housing, because it affects so many things, are going good. So it feels good. Continue to put people in houses, continue that part of the economy. Because when mortgages, when housing struggles, it affects so many different things. And I'm thankful for that. You know,
John, do you guys have a flyer that you could give to Steve so that we could put it in our buyer's package?
yeah, actually on our website, and like I said, I with Zoom, I don't know how to use it that great, but on our website, and I can send Steve the link. I'll just put a note.
Well, and it might be, and you might be talking about the one I actually put in the invite in the emails that I invited everybody. I did.
Yes.
I actually already put the one that's got the breakdown of the 3 programs. Is that the one?
Yes, yeah. So you know how to get that, Steve. So yep. Steve can show you. You can, I believe, you can personalize it with your information at the bottom. It's editable and everything. Like I said, though, if you have a borrower that's, you know, if they want to speak to me or someone at our company, feel free to have them reach out. And I mean that. I talk to borrowers all the time. Matter of fact, our compliance was so busy now. There's 3 account managers. We're getting all the 800 number calls. My phone constantly rings to speak with borrowers that are calling in about the programs. And that just got switched actually this week or whatever. So I don't mind speaking to borrowers at all.
Okay.
If you guys have any questions, reach out. I don't mind at all. I'm there, like I said, to help anybody that definitely needs assistance, education, whatever.
Anybody else? I know it's morning.
It's morning.
Not enough coffee. Got it.
Yep. No, it's morning and everything. But yeah, it's like I said, I'm so grateful and thankful that the industry is doing well this year. You know, me and my family have been safe, which is thankful. Hopefully that's everybody on this call, you know, yourselves and your family. But yeah, I'm thankful and grateful.
Well, and to kind of piggyback on that, I think IHDA is going to be a very important thing here in the next 14, 16 months, because I think what we're going to start to see is another big impact by the first-time home buyers, because I think they're the ones that we're going to see that are going to be coming back into the market, because if rates do go up a little bit, you're not going to see as many people selling and buying. You're going to see people wanting to get in before it's too late to get their first home. And I think IHDA is going to be a big play to be able to make that happen, where people are like, they don't quite have enough money to make it work, but they can do it by using the programs.
And
I mean, we're going to see that.
Yeah. One thing to mention about that, like a lot of people that get IHDA don't even know they're getting IHDA assistance, because it's all done by the lender I mentioned. I think last year it was about 6,000 loans, and it works out to 1 in 10 first-time home buyers. This is irregardless. We have income limits, but 1 in 10 first-time home buyers in Illinois uses an IHDA product, and that's 10% of the market. I know. I mean, Steve, I love working with Steve, but you have loan officers that I'm not touching IHDA. That's low loan amounts. It's too much trouble. Steve knows if it is trouble, Steve reaches out and then we make it easy, right? But 10% of the market that you're not even touching, if if you're not dealing with items. So one thing to mention also, I don't, if you guys have ever dealt with items, we come out with interest rates every day, right? FHA's been around 3% roughly. Conventional's been around 3.25. Our interest rate is irregardless of their credit score. So I mentioned when you need a 640 to 850 score, they're getting the same interest rate. Condo, there's no add-on. Low loan amount, say they're buying a $100,000 condo and the loan amount's below 100,000. There's no add-ons. So when I talk to borrowers, I say the rate is the same. We have over 150 lenders. It doesn't matter who you work with. Okay. What matters if you're using IHDA assistance is service. And I mean, I work for IHDA. I can't say go with Steve, but I can tell you Steve knows our programs, knows how to service them, knows how to get them closed, knows how to reach out with any questions. So I can tell you Steve does take care of everything. I can't say go with Steve, but he definitely knows the program well and everything. So
I can see it though.
No, Steve, you know that. I mean, that's, like I said, I'm very open book, genuine and honest, but it really comes down to service, and that's huge. Because if you've ever, sorry to go off on this little tangent, if you've ever dealt with a lender or loan officer that doesn't know our programs, it can be the biggest frustration. Me personally, like I said, I don't make commission when a loan closes. I'm salary, straight salary. But I've had calls the night before saying, yeah, we're calculating their income, they're over income limits. How, and I'm just thinking out loud, how did you get to and I know it's busy right now. People are busy, operations are overwhelmed, but how did you get to the day before closing and you don't know they're under our income limits? And I've worked things and done things and was able to save some of them. And I'm like, thank God. I've had people at the table. I've had calls over my years saying, yeah, we're waiting for the IHDA money. I told you in the beginning, the lender funds it. And this is from they're sitting at the table. And it's just, that's frustration for me. That doesn't, you think that borrower, if they had that experience, even using you as an agent, they're probably going to come back? Probably not. The loan officers lost the customer, lost referrals. So me personally, if someone doesn't know IHDA, I'd rather have them not do IHDA. And I know that sounds weird coming from the sales guy at IHDA, but I love to educate, train, explain, because if you know it, yeah, there's some paperwork, and we've actually made that easier over the years. That can be. Do you use electronic signatures, Steve?
Back and forth. I mean, we do for sure.
Yeah. So I mean, all our pre-closing docs can be electronic signatures. We got rid of the seller affidavit, so you don't have to worry about that. So we've continually tried to make it easier and everything to use IHDA. But like I said, I can't say go with Steve, but he does know the programs, and that's the biggest key. The interest rate is not less. It can change daily, but it's not the less for any for any one of our 150 plus lenders that offer the program. So
I just want to let you guys know, I put in for the Zoom group chat, I did find the file, the PDF that Steve had sent over for the IHDA flyer, and I put it in the chat. So if you guys are looking for it, you can go to that. One less step to have to worry about. And I wanted to let Steve know that I've got parent-teacher stuff, so I'm going to be logging off in a minute because
yay. And I'm sure we're all dealing. It's weird. I know, we're just sitting here chatting like in a room, but everybody's adapting and dealing. So you have to, my daughter, she's a freshman in high school, she's at home and everything. So, and my wife works from home. So I'm in my basement. My wife's in one room. My daughter's in another. So yeah, everybody's adapting. So it's interesting times, but like I said, I am grateful that, I'm stressing about too much work and trying to handle it all than stressing about where's, do I have a job and everything. So hopefully everybody's adapting well there too.
Exactly. Well, I appreciate all your time today, and I look forward to more links. And of course, if you've got any YouTube videos, that I can share across my customer base, that'd be great too.
Yeah. Let me look at that or whatever.
On the website, I believe.
Yeah, they were talking about developing some of those, our marketing communications team too. But yes, I don't know. I think if we do have new programs, they had talked about rolling those out with some videos and everything.
Great.
Everything. So definitely we'll let you know those. Like I said, if the new programs do come out, definitely we can get together for, 10 minutes. I'll be like, all right, here's a program. You guys already know the parameters, qualifications, but yeah, so.
Okay. That sounds
Thank you
great.
very
Thank
much.
you.
Thank you.
Well, I don't want to keep everybody this morning, but thanks again for everybody for joining. If you have more questions, obviously you can reach out to me anytime. Everybody knows you can text me or call me pretty much anytime and you'll get me. So I'm hoping maybe even to have another one of these, maybe like next month on a different topic, that kind of thing. So that's why I don't want to like push a lot of stuff today. Just want to make it kind of short and sweet. And everybody can kind of, get to their day. But if you need me, just feel free to give me a call afterwards. Okay?
Thanks, guys.
Thanks,
everybody.
guys.
Take
Have a
care.
great one now. Thanks, Steve.
Take care. Thanks, John.
Take care now.